there's a handful of ways to find it. I just typed in IFR, increase, flat, reduce tutorial, and then this is the app. So if you're not using this module and you're talking about taxes, I highly encourage you to get familiar with this module. It helps people understand on a very basic level what's going on with compounding and then what's missing from the conversation, which is the tax conversation. So I'm going to go through this pretty fast just to get you a high level look at the screens. So once we're in here, there's a lot of language and things you can incorporate into your presentation. I'm going to just jump in and say, okay, if we've got a 42-year-old, $500,000 balance, that's my example, 30 years of accumulation, top tax bracket, what does all this look like? I really try to keep IFR simple. I'm not getting into different rates of return. I'm not getting into anything. I'm assuming a tax deferred bucket in the future is going to be lower than my current bracket. Don't have to do that, but I can. Again, you can play around with this and look at your results and see if you want to change your numbers at all. I'm very much a fan in this module. Keep it very simple because this is conceptual more than mathematical, in my opinion. So it just takes us to the first screen and says, okay, if we have 500,000 up here and we've got 30 years compounding at 5%, what are we going to have at the end? Again, very simple presentation, nothing crazy here. Then it brings in the tax conversation. And so you can understand and start to explain to the client, these taxes are happening and how are you currently dealing with them? And they may not know the answer to that question. They're going to be like, well, my tax person just tells me what taxes I have to pay each year. So they're not connecting the dots of, all right, this taxable account over here is producing taxable income that shows up on my tax return, and I have to pay taxes from my budget, from my household, from my lifestyle. So now this starts to show you the ability to simply show them what that tax is. And you can, this scale over here is sliding scale. You can go every year. Again, I'm going through this fast just to remind you that it's here. And if you're not using this module, I'm a huge fan because you can come in here and show that, all right, yes, while we had 500,000 starting balance compounded at 5% over 30 years is $2.1 million. Well, $680,000 of tax came from somewhere, and you can pinpoint a year. And then you can say, well, not only did 680,000 of tax come from somewhere, we also had lost earnings at the same 5% rate, lost opportunity cost on those taxes, which was another 584,000. So it starts to set the framework for a module we'll look at later, which is buy term invested difference. But it's starting to compound these things together to say, look, there's a lot more to the story. And if you've never heard this before, this is one of the key reasons you want to work for us. We want to help solve this tax problem for you. We want to first identify it. We want to show you that it's real. We want to show you the math behind it. And then we want to solve for that problem. How do we get more of your tax dollars back in your pocket? So then we've got alternatives. We've got a flat alternative and we've got a reducing alternative. So you could say, and I'm going to, again, skip through to get to the visuals. The visuals is really, to me, where it's all at.